Welcome to the Naked Forex webinar. I'm Walter here. Jim says start with the pound. Oh, that's awesome. Unfortunately, Jim, that's not one of the trades. I'm not trading that here, unfortunately. No, actually, I shouldn't say that. I haven't had one on since last week. There is a trade on the pound, so that's good. Hey, Martin made it as well. Hey, Martin. Okay, folks, so my name is Walter Peters, and you're here at the Naked Forex webinar. Among other things, I wrote a book called Naked Forex, where we talk about, in the book, it's all these sorts of systems that we'll talk about tonight, which are trading without indicators and using essentially horizontal support and resistance to take your trade and using specific price patterns off of those. Now, there actually are some trades that I take that are not based on horizontal support and resistance. They're simply price patterns alone. And I'll show you actually several of those that are in play right now. These, if you haven't seen this before, then you may not have the book. If you don't have the book, you can just email me and I'll send you a copy of the book. But these are what are known as belts. And I have 4 of them on currently, 4 belt trades on right now. So that's why I said it's really good that we have this webinar on tonight, because I'd like to show you sort of how I got into these trades and why I got into these trades. So those 4 are the Euro Aussie, the Euro CAD, the Euro New Zealand, and the Aussie Swiss. Those are the 4. Okay? So as I was talking about it earlier, basically there are several trades that I have on at the moment. The Aussie Swiss, the Euro Aussie, the Euro CAD, and the Euro New Zealand dollar. All of them have very similar setups. They're what are known as daily belts. Daily belts look like this. Let me zoom in so you can see. And if you don't have the ebook, for the belts, you can always email me and I'll send it to you. It's free. Everyone who's here gets it for free. And my email is on the screen here. It's walter@fxjakes.com. That's my email. If you want the belt book, if you don't have it. But if you have the belt book, then you know what they look like, and they look like this. My rules for belts are as follows. I only take those belts that have belts are essentially they're gap candles. They're gap candles, and they close at the extreme. So as you can see here on the Euro Aussie, we have a great example of a gap opening. And for me, the rule is they must be at least 20 pips. Okay? So 20 pips or greater. What do I mean by that? Well, it's pretty easy to figure out. Last week, the Friday candle closed here at 28.24, 1.2824. And then we opened here at 1.2806. Right. So that was actually 18 pips. But it didn't fit my 20 pip rule. It was actually 18. This was the one of the 4 that I actually was willing to overlook. And the reason why is because it had a really nice low close down here. So I decided I was going to take it. Also, if we back it up here, you can see here that the market has shown some, this is a pretty good level around the 28 level, 1.2800. You can see we've got resistance here. We had resistance before it broke through, found support, support, support. It even held here at support before it printed the bell. And it also found resistance over here in the past. The 28 level is a pretty good spot. So here's how I trade these belts. I usually put my sell stop a few pips below the low, and then I let it go. And I really would like for this pair to make it all the way down to this area down here, around 26. Right about there, 26. That would be ideal for me. I know I've broken my rules. It's actually the only one. If we'll look at the other 3 belts, and it's the only pair that printed a belt this week where it wasn't 20 pips. But I decided to take it. It just looked too good. And the reason why it looked too good is because of the close was so nice. That really not. Look, the low is 27.21 and the close is 27.26, within 5 pips of the close. That's a really nice close to me. So now, if I look at this pair from a 1-hour chart, we just had the market come up and print this really nice bearish candle right here. Look at that. It's not quite a kangaroo tail, because for me, a kangaroo tail is also a nice pattern that I trade off of. This is a kangaroo tail here, because the open and the close of the candle in the bottom third, the open and the close of the candle are inside the previous candle's range. It extends, the tail extends beyond a zone. This one doesn't quite qualify because the open and the close are too close to the middle of the candle. But either way, it shows you that price couldn't get through here, couldn't get through here, couldn't get through here. So what it means to me is that this could actually be an opportunity to add to this belt position. Does that make sense? Hey, Vina is here, and V, and Dapper Dan. Welcome, everyone. So that's kind of how I'm viewing this, is this little bit of a retrace move that we've seen today so far could be an ideal opportunity for me to add to my belt position, albeit with a much tighter stop. I'll just put my stop up here at 27.62 and sell it right about where it is here. So now I've only got 30 pips of risk here. And this could actually, if it goes all the way to my profit target down there, I mean, that 30 pips of risk could turn into 120 pips of reward. That's 4-to-1 for those of you who are not in calculus. Just joking. I'm really bad at I'm really bad at like figuring out, like obviously with this belt, oh, it was 18 pips. It wasn't it was 18 pips away. It wasn't 20 pips away on the open. So that's the basic idea of a belt. Let me show you a clearer example on the Euro CAD. Hey, Dapper Dan, it's David from Sydney. Hey, I was wondering if you were going to show up. Hey, David, what's happening? I'm glad to see you made it. I've just been emailing David tonight. So here's the other one right here that I want to show you. Hey, good to see you make it, David. That's great. I wasn't sure if you were going to have time to show up tonight. Took you a while, yeah. So here we go. This is it. It's another really nice belt. So this one is going to fit our rules, isn't it? Yeah, you have to set the software to get into here. You're going to love FX Street, David. You're going to really love it. Great. It's a great website if you haven't been here before. Everyone else here will tell you. So here's the second belt. This is the Euro CAD. Again, last week we closed here at 28.80, and then we opened at 29.05. So that's 25 pips higher. 28.80 closed on Friday. Monday we opened at 29.05. It's 25 pips higher, so that fits my rule. All belts are on the daily chart, asked Martin. Martin, good question. I sometimes trade the 1 hour and the 4 hour belts earlier in the week, right when the market opens. But generally speaking, I prefer to trade the daily belts because I found it to be much more reliable. For example, if we break down to the 1 hour chart on the Euro CAD, let's see what happened with the open this week. Whoa, that's too far. So the open this week was here. What's it? Yeah, 29.05 right here. Okay. So it didn't really print anything nice on the 1 hour chart. What about the 4 hour? Earlier this week, where's our open? Right here. 29, right here. Yeah. Didn't really get, anything nice off the 4 hour chart either. So to answer your question, Martin, I prefer to trade belts on the daily chart. That's my preference. And what you'll find is that obviously the first day of the week, first of all, I ignore the weekend. If you have a chart that has like a little kind of tiny weekend candle that's like 4 hours long or something like that, well then, I ignore that candle. I really want to work off of charts that look like this, where I have a 5 p.m. New York close, and thus a 5:01, New York open for my daily candle. Because if I do that, I won't have those little weekend candles And what will end up with happening is I'll get these Monday belts, and then on Tuesday, I just put my sell stop below the low right here, stop loss goes above the high, and then I let it rip. And you can see this one is obviously in 50 pips of profit, right? Oh, sorry, about 46 pips of profit right now. Yeah. So this is another one. But if we look at the lower time frame, do we have an opportunity to get in on this one? Perhaps, because this is new. This candle just started printing. But what we have here is this is a really common formation many of you are familiar with, where the market will kind of move up in a little bit of a, like a little, I call them wind socks. They're like little flags, right? Market's been moving down. Now it's moving up in a little bit of a wind sock. And then it usually means it'll break down and keep going in the trending direction, which is down, of course, on this pair currently. Here you see another one right here. You get these really half-hearted moves up like this. Really weak-looking move up, and then boom, you get a big bearish candle on the outside. Boom, it breaks down and keeps going. That's very common when you have a trending market to see something like that. So perhaps I might have another opportunity here to sell the Euro CAD, but that one's doing pretty good. The other two we'll show are not as happy. So we looked at the Euro Aussie, we had the Euro CAD, the Euro New Zealand is another belt. You can see the Euro New Zealand is marked right here with this blue arrow, the daily belt. It closed on Friday at 65.98 and it opens down here at 65.52. So that's 46 pips, right? That fell 46 pips. So that's a really nice looking Euro Kiwi belt. So what do? Put my stop loss above the high, my sell stop below the low, and I let it trigger. Now it would have retraced quite a bit actually, but that's okay because for me, these are some of my favorite trades. I don't mind if they retrace, quite a bit even. You'll notice actually going back, here's another one down here. Here's another really nice belt right here. It closed at 58.81, and then the next week it opens at 58.31. 81, 31. That's 50 pips, right? So here you see we triggered on the next candle. We traded higher. We're in a bit of a drawdown the first day. Stop loss is all the way down here. And then look at that. It just goes and goes and goes. It made all the way up to about where the recent highs were right here. Actually, when I target recent highs or recent lows for my trade, I will actually go just slightly below it so that if something like this happens, I do get taken out. Martin says, so the belt is the week's opening candle only. Well, good question, Martin. In Forex, the answer is yes. Because our markets are so liquid, it's unlikely that you're going to see a gap, on a Wednesday, obviously. Now, if you're looking at stocks or CFDs or things like that, you're probably going to see belts all over the place, right? But for Forex, which is really primarily what I trade, I'm going to find my belts. Yeah, I'm gonna find my belts basically on the opening of the week. So it's that Monday daily candle. That's really when they occur. Here's another one here, but this one probably wouldn't have qualified. Let's see. The open is at 75.65. The close is. Wait, hold on. I lost that one. Hold on. I just want to check this one really quickly. This one right here. This one, it opened at 75.65, and the close the previous week is 75.93. Okay, so it did too. 75.93, 75.65. Yeah, okay. It's almost 30. That's 28 pips, right? Okay, so there's another belt right there. Boom. Triggers on the next candle. Does a little bit of a retrace the next day, the second day after. Third day goes a little bit, and then boom, then it's just off the races. For me, for my money, these are pretty much my favorite trades. I mean, I don't know. I haven't seen anything. I haven't come up with anything that's as good as the belt. Now let's look at this one right here. So we closed on Friday Yeah, Manoj has a great question here. You're right, Manoj. Manoj says, look, the gap size depends on the pair. So the Euro New Zealand has a very large daily range compared to the Euro Pound, which has a small. That's right, because the Euro New Zealand, we're playing with less per pip. We're going for like on a mini lot, like 77 cents per pip or 80 cents a pip, somewhere around there. And then when we trade the Euro Pound, we're looking at $1.60 a pip, right? So you're right. So the movements you see on this pair are going to be greater than you see on others. And you're absolutely right, Bernard. So if you want to adjust this, you're right. Yeah, exactly. So if you want to adjust this, then that's perfectly reasonable. Now let's take a look at this one, because this is an interesting one right here. I want to make sure that I'm looking at all of the belts. So this one right here, the market closed on Friday at 71.06, and then it opens all the way down here at 70.60. That's 46 pips lower. The high of the belt candle is 72.19. Now notice how it has a nice high close all the way up near the high. The high is at 72.19. So let's say I put my buy stop at 72. I don't know, 72.27. So that's 9 pips. Or sorry, 8 pips higher. And then guess what? The next candle here never triggers my buy stop. It goes immediately and falls to where my stop loss would have been. So I just removed my order. So I avoided a losing trade simply by waiting for the market to make a higher high to take out my high of the belt. Manoj says, have you tried extending the strategy to equities which show gaps and belts every day? No, that scares me, Manoj. There's so many currency pairs that for me it's, I have plenty of currency pairs to choose from. So although it's tempting, I'm not sure. I think I'd have to come up with very different rules because of exactly what Manoj is talking about. You get these things all of the time. I don't know about fading belts, Manoj. Manoj says, about basically taking the opposite. So if a belt fails, would you go in the other direction? I suppose you could. I haven't tested that, so I don't know. Dapper Dan says, would that be a big shadow? This example, David, is not, if that's what you're talking about, because we didn't have a higher high on the bearish candle. So it didn't quite fit a big shadow setup, unfortunately. Yeah. So let's go back to the 1 hour and just take a look at this pair. So we don't at the moment, we do not have a reason to take another position here. But if the market on the Euro Kiwi came up here and printed a nice bearish candle, like a kangaroo tail or something, off this zone, we found support, that may be worth another position, in my opinion, for me. Okay, let's look at the Aussie Swiss. The Aussie Swiss is the other one, the other belt, which is right here. It's a buy belt right here. And this one triggered on the next day, and it's a bit of a drawdown right now. But it's come down to where we've seen some support in the past, this 94 level here. We've seen some nice bounces off this level. So perhaps with a 4-hour chart, we may get a nice bullish candle here, which suggests a bit of a bounce off this level. And that may be good. That may be good for not only the daily chart trade, but it may be good for another entry, another tight entry, as we were looking at before on the Euro Aussie. So here's the Euro Aussie, and again, I was talking about possibly taking another entry here off this candle right here. That looks pretty good to me. What was the other one? So we have the Euro New Zealand, the Euro CAD, the Euro Aussie, the Aussie Swiss. I think some people may have taken the New Zealand Swiss belt, which of course is this candle right here. I actually didn't take that one this week. I've taken it recently in the past. I took this belt right here, and I took this belt right here, and I think that's it recently. I don't think I've had one since those two, which were in quick succession. I haven't had any belts since those two recently on this pair. But so if we were looking at this belt, which again I take this one. I like the Aussie Swiss the Aussie Swiss one slightly better. This would be, again, stop loss down here, 72.37, buy stop above the high. That's about 65 pips of risk. And right now being very slight profit. Very, very slight profit. Where might a nice target go? Well, for me, a really nice target would be right around here where these lows are, 73.80 or so. That would be a great spot to see if this market could make it up there. Hey, Jack is here, and Mish, and Talon, and Anthony. Welcome, everybody. Hans. Hey, Hans. So, somebody wanted to look at the pound. Let's take a look at the pound. Wow. The pound had a big spill tonight. You'll probably be able to tell me what the rules or what the news was. Was there some news on the pound? Must have been. Yes, Manoj. I've been talking about the Euro Aussie for like ever. And what Manoj is referring to is, if you don't have the Belt ebook, guys, just email me, Walter@FXJake, and I'll send it to you. It's yours for free. But on the Euro Aussie, we had, actually, let me switch to another chart because this one's ridiculous. This one's so much easier for me to see. Okay. On the Euro Aussie, I've been talking about this for a long time, for those of you that have been here. This is what's called a first touch trade. Hey, if you don't have the first touch ebook, I can give you that one too. The first touch trade is basically what we had here on the Euro Aussie. Euro Aussie's been respecting this 130 level for a long, long time. It's been the all-time low for this pair until earlier this, or actually late last year, when it finally broke through over here in December, and it fell through. And I said, after it fell through and it got all the way down in this area, in January and February, I started talking about a first touch trade off of the Euro Aussie, 130 level. And I even started drawing a shaded box in there. And I said, when it gets to the shaded area, I'm going to get very excited. It came really close here, right here, but never really took the bait, came back down, retraced a bit, and then just recently, where all these numbers are, we've had our touch. So let me go down to the 4-hour chart so you can see how I traded this one. This again is a first touch trade. So if you don't have the first touch book, just email me and I'll give you the first touch trade book. But this is the essential rules are as follows. When the market gets up to a level, a very, very strong level, that's the critical thing here, is that the reason why this is such a great trade is not because I arbitrarily picked a number out of thin air. It's because the market has repeatedly found support here. Support, support, all the way back here. We had support, support. So, going back in time, there's a lot of support here. In fact, on the daily chart, we'll find a lot of nice naked trading setups. This is a kangaroo tail right here, a buy signal. There was actually another kangaroo tail I took on the other side up here, which was a sell signal right here. That's a sell signal. Buy signal, sell signal. This is a bullish big shadow, like David was talking about before. Nice big engulfing candle right here. That's a buy signal. So all of this has happened off this 130 level. It's a really nice level to find trades at. So now, first time the market comes back to this level, guess what? It comes up to the level, it spikes through, it can't close above it. That's critical to me, that it can't close above it. Couldn't close above 130. So what does it do? It spikes through it. Now, there's two ways of trading it. But the aggressive setup is to wait for the market to just put a sell order at 1.30. Okay, 1.3000. And then putting a stop like 60 pips away, or about 65 pips away from that entry. And if the market gets up there and stops you out, then it's game over. You could also put put your stop 60 pips away, and I'm talking about as a daily, this is for a daily chart trade, so 60 pip stop is actually quite tight. If the market triggers my order here, and then it closes above 1.30 on my lower time frame level, which is my 4-hour chart here, if it closes above that 130 level, then I'm out. Immediately out. I don't wait for the market to come up and hit my stop up here. My stop would be up here at 130.60, we'll say, right there. Right about there. So I don't wait for the market to come up and hit my stop. Instead, I close it as soon as the market closes above 1.30. But it never does. It came back down, and it came back up and made another near miss here. The conservative way of entering this is not just simply waiting for the market to touch the 130 level on the first touch and then selling, but instead is to wait for a double touch, right? Wait for it to touch, come down, then come back and touch it again. And for me, that was the really nice entry because I'm a little bit more conservative. So for me, it was this bearish candle right here that was the entry, right? That was, to me, like if you look at it on a line chart, it shows at this stage, it's right here. It looks like that. To me, that looks like a bend in the road. Why? Because it's a nice bearish candle right there. That bearish candle tells me it's a bend in the road. Is the first touch ebook in the course? No, it's a new thing, so it's not in the course, David. I can, like I said, I can send it to anyone here who wants it. I give it away at FX Street because I like you guys. Yeah, because FX Street is a great website. Yeah. Hey, Colin made it. Hey, Colin. Good afternoon. Oh, I guess it's good morning for you. Yeah, so this is a double top here. So the first way to trade a first touch is to just wait for the market to get there, put your order in, and let it rip and move your stop, 50, 60, 70 pips above it, and see if the market can hold. The more conservative way is to wait for the market to touch it again after it touches it, and then wait for a bearish candle in a sell trade. For a bullish one, you wait for like a double bottom and a bullish candle. For a bearish one, it was this candle right here that triggered it for me. So my sell stop was down here at 29.25. It did trigger on the next candle, and my first target was 27.90, which is this green number down here. Why do I have these things in red over here, 2,900? Well, because I knew that these were going to be the problem areas. 2,900 right here was going to be a problem area. Why? Because we had these touches here. There's a touch there, one there, and a couple right here. So I knew that, and also remember when it double topped, that's where it reversed that right there at 2,900. So there are many touches at 2,900. So that was a problem area. The second one was 28.50, which is right around here. And why do I say that? Because we had a near miss here, a touch, a hold. It held a support, a little bit of resistance there. And so I thought, well, when it comes down to 28.50, I want to see it close below there. We did get a close below there right here. Another move up, and then finally it fell. And once it came down and took out my target, or got really, really close to my target, I moved my stop loss to 29.22, which is where it is right now, at plus 3 pips. Now, it's I think it could go lower. I think it could go to 25.80. It could certainly go to 26.60. It didn't quite get there, which is where this bounce was. But it could also go down here, all the way down here to 25.80, where we had a bounce down here. So for me, this trade is still on. It's still open. And remember, on this trade, the risk on this trade, it was at 29.25, and my stop goes over here. Risk is 100 pips. The first target's 140, and right now we're sitting at almost 200 pips in profit. We're going to go for 270 or maybe even 340 pips here on this trade. I love first touch trade, but the critical aspect of the first touch trade is that zone that you trade off of, it better be strong, and the market better have, really respected that. Hey, Sherman's reading the Naked Forex book. Thanks, Sherman. I appreciate that. I do hope that you enjoy it. Sherman, in the Naked Forex book, you'll read about whammy tops and whammies and moolah. This is kind of like a moolah too. This trade right here. I hope you enjoy it, Sherman. Mish says, was the tail candle 3 before the long red candle rejected a sell signal? Okay, let's look at that, because that's a great question, Mish. Does everyone see Mish talking about this candle right here? I said that this bearish candle was the reversal, but an aggressive trader who doesn't mind taking a few more losses could have instead used this candle right here, which is exactly, this is a kangaroo tail right here. It's a kangaroo tail because the open and the close of the candle are in the bottom third. The open and the close of the candle are inside the previous candle's range. It's occurred right on a zone. The only thing I would say about this one, Mitch, is that the tail should be a little bit longer. For me, I prefer to see kangaroo tails like this one over here. See this one over here? That's my style of kangaroo tail, with a nice long tail like that. And it helps when it has a bearish close if it's a bearish signal. For me, I enjoy these sorts of tips. So this one's perfectly legitimate. It just wasn't, to me, it wasn't ideal. So I wanted to wait for that first bearish candle. But I can see where many traders, in fact, I know many traders who trade off of these candles, Mitch. So it's really up to you how aggressive you want to be. Yeah. It's completely up to you. So hopefully that makes sense. So as far as I'm concerned, this trade is still on. I don't really, I'm not really gonna. I don't really want to mess with it. It could come up to this level, this 27.90 level, and bounce off of that. That's probably pretty likely if it doesn't turn around right here. If it doesn't turn around where it is right now, it could come up a little bit higher, bounce off of there, and then start trending lower. So that's a possibility. But for me, again, the first touch is all about finding a really nice zone and then waiting for that market to trade away from that zone. Carlos, that was a good trade, but I'm waiting to see if the Euro Aussie reaches 27.85 zone to add on after confirming price action. What do you think? Well, I think we should take a look. 27.85. Yeah. I think that an aggressive trader could actually take a trade right now. And that's because you got a touch here, a touch there, and a touch here. So an aggressive trader could sell off of this candle right here. If I were not in this trade, I would put my sell stop a few pips below the current low. So the current low is 27.31. I would put my sell stop at 27.28 or 27.27 down there. If the market triggers me in, I can put my stop loss up here at 27.63 and then see if I can target down here at 26.83 or beyond, obviously, 26.63, 25.82, those levels. So I think that's a perfectly legitimate setup. Also, remember that we have this belt working in our favor on the Euro Aussie. Look at this belt. This belt is absolutely working in my favor. So not only did I have a first touch up here, but I also had a brilliant belt set up earlier this week, which tells me that I have a pretty nice shot at the market going trading lower. And the belts, again, to recap, the belts are on the Euro Kiwi, the Euro Aussie, which we just looked at, the Euro Canadian dollar, which is right here, the Euro Canadian dollar, which is this belt right here, and then the Aussie Swiss is the other one. That's a nice one right there, and the Aussie Swiss is the other one. The Euro Aussie is at a very strong weekly resistance level. The Euro Aussie has a very strong weekly resistance level. Weekly resistance level. Okay, let's see. I gotta go to this is too crazy. I gotta go to my weekly chart. If I don't go to my weekly chart, it just doesn't look right to me. Okay, Euro Aussie weekly resistance. Yeah. Which one is that? Which one is that, trying trader? Is it 130? Is that the one you're talking about? Because that was the first touch off 130. It could be this one right here you're looking at. Where these two, like this week couldn't get through it and this week couldn't get through it. Yeah. That was, I mean, that first touch was a great level. That was really good. Carlos says 2470 on the Euro Aussie. Oh, right, as a target. Absolutely. Yeah, 2470. Yeah. 2470 right here. Oh, yeah. I see what you're talking about, Carlos. Look at all the tops of these weeks right here. That's going to look really good on the daily chart. Yeah. Yeah, absolutely. Are there any charts anyone would like to look at? So for me, the main trades I'm in, now I am in, we had a pound set up too, actually. And I know a lot of you know about this one. But the pound had a kangaroo tail here, and it failed. So I like to take, when my kangaroo tails fail, like this one did, it actually did just slightly trigger it on the next candle. And I actually, on this trade, I actually did not take the kangaroo tail because I would have preferred to see it print down here on this level. It printed on an area where I know a lot of traders who trade naked took it, and I can see why, because you can see we have touches here, there. But if you look at the line chart, that zone looks like a really nice zone. Look at all these bends on there. Boom, 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 boom. So I can see where a lot of people took that one. But for me, it wasn't good enough. I wanted to see it go a little bit lower. But what I did do is I faded it. I took the opposite trade. So instead of having my buy stop up here, I had my stop loss up there at 58.41. And I had my sell stop down here at 57.25. My stop loss has now been moved to 57.23 because it hit my first target here at 56.60, and I just missed getting stopped out because you see this candle right here? It went as high as 57.16, right? So it never stopped out. And this candle again, yesterday's candle in fact, went as high as 57.15. So it missed my stop by like a few pips. And I'm glad that it did because now it's off to the races, right? So this is an example of a kangaroo tail gone bad. And this is kind of like what Manoj was saying earlier. Would you take we actually had another one up here, a kangaroo tail gone bad on the pound, where it didn't work out. It traded higher than the kangaroo tail, just slightly. Then the next day it came down where the stop was. So that for me was a sell too. It was a sell all the way down to here. So that was another really nice looking failed kangaroo tail sort of deal. I like trading those. Alex says, when did you figure out that the kangaroo tail went bad? Yeah, let's talk about it. This is a great, fading kangaroo tails is good fun. Let's talk about it. Okay, this is how it works. Let's just go like this. Okay, we've got a kangaroo tail right here. All right. So let's say I wanted to take it. I said this is a nice level. I see some highs over here. My kangaroo tail is sort of resting on the highs over here. So I want to take it. I actually didn't take this one either because I was hoping that a kangaroo tail would print down at this level, sort of like the other one. I didn't take either of the kangaroo tails, but I did fade them both. Okay, so here's how it works. So I go, okay, well, I'm going to put my buy stop above the high here at 61.67. Okay, 61.67, my buy stop, and it's going to be green because that's my buy, and it's going to be 61.67. Okay, so there's my buy stop, and then I put my stop loss down below the kangaroo tail down here at 60.61, and it's going to be red because it's my stop, and that's how I trade it. Okay, so let's just say I trade. Now this is real, fading kangaroo tails to me is a great exercise because it encourages flexibility. I can't tell that Alex is. Yeah, Alex is not an Aussie. Yeah, yeah. Everybody. What I've noticed since trading kangaroo tails, that everybody trades kangaroo differently. Sometimes it's KENG, you or you. There's lots of ways to spend on kangaroo. But obviously Australians are pretty good at it, right? Australians only wish that people would buy kangaroo meat, but no one wants to buy kangaroo meat. Okay, we're getting off track here. Let's go into the trade. So I have a buy stop here, and I want to see it triggered on the next candle. Boom! It's hit. I'm in a drawdown of about 26 pips the next day. All right, so I'm still in the trade, and then boom, my stop is hit the next day. That's when I know it's time to fade the kangaroo. So what do? I just swap positions. My entry is down here, and my stop goes up here. And that's it. That's how you fade kangaroo tails. It encourages flexibility. It helps people to, because a lot of people, like I know I have a sell bias. I'm much better at selling than I am at buying. And so if traders get stuck into a mindset of only taking trades one way, or when they see a setup, they only take the setup, and when it goes bad, they don't want to have anything to do with it. Well, you miss out on things like this, where here we go, the kangaroo tail's faded, still in a bit of a drawdown on the first day. Now I'm in profit. Now I hit my target. I blow through it. I've got another target down here, these lows, and I easily hit that as well. So there you go. There you go. That is kangaroo tail. Now here's another one. Same thing. What do? If I wanted to buy this one, again, I didn't think it was in a good spot. I preferred to see it down here. But let's say I took this one. I take this trade, stop loss down here, buy stop up there. I go. I'm triggered, just barely triggered, right? Just barely triggered by the width of the spread probably. And then I'm in a drawdown, and then I get stopped out. And now, as soon as I get stopped out, it's time to fade this sucker. Now, it did mess around down here for some time. It hit the first target, which was 56.60 for me. It did mess around. Once it did this candle, I said it's time to move my stop to break even. So I move it down to this number here, 57.23, which is right there. That's my new stop. So I'm going to make a few pips if it comes back up. It didn't hit it, and yesterday it didn't hit it. And now today we're off to the races again. So I'm waiting for 54.30 right now, if you can believe that. I know that's a long ways to go, but to me that's the next stop here. I think this pair could fall rather quickly. Dapper Dan, I have found, David, I found that fading kangaroo tails is great. I've tested it. It works. Occasionally you'll lose on both. Occasionally, like, I might, if I had a buy on this one and then a sell, occasionally you'll get whipped and you'll lose on both. But usually if you think about it, what's happening on a kangaroo tail is you're trading off support and resistance. So you're basically trading a reversal off of support or a reversal off of resistance. If it fails, it means it's going to be a breakout, which means it's going to really go. So usually when you see that kind of setup, when you're fading a kangaroo tail, it just means you're going to get a breakout trade, because most of the kangaroo tails that people take are essentially reversal trades, because most traders are reversal traders. If you fade it, you become a breakout trader, and it allows you to really find some nice profit. I have found it to be a very high probability, yes, for me. But I encourage everyone to test it. Any other questions? Anyone want to look at any other charts? No? See how's the Euro Aussie going? Move back up. Do I use pivots? No, I don't really use pivots. I prefer to use support and resistance zones. I use those as my pivots, because that's, to me, where the market turns around in the path, like right here. That's where I want to place my trade. And maybe sometimes those line up with pivots, but I haven't really found pivots to be very reliable for me. I know a lot of traders use them, but for me, I'd much rather hang my hat on those spots on the chart where the market turns around. Like right here, like this is a great example right here. Look at all that. Look at all that right there. Boom, boom, boom. The market's turned around so many times. So I'd wait for the market to go there and give me a price action pattern. Don't really see any there though. Don't see one there either. CAD Swiss. Sure, we can look at the CAD Swiss. I think we have a few more minutes. CAD Swiss, that's a really interesting chart. I would say that it looks like it's, if I were trading the CAD Swiss, I would want to see the market bounce off of 93.70. Schwage wants to know if we can do a webinar to draw support and resistance for all time frames. Yeah, I used to start out the webinars with that, but I don't know why I stopped doing that. We can certainly do the next webinar. We can go into that if you want. I know people are, it's important, so we can do that. That's a good, thank you for that. We can do that. So if I were trading the CAD Swiss, this is what I would do. I would look at this 93.70 level, and I would probably, if I wanted to trade it, I'd probably wait for it to come down on the 4-hour chart and give me a nice bullish candle. If it did not, if it closed, started hanging out down here and closed below it, then I would start to look for reversals, because on the daily chart, obviously, this is a nice area of resistance. We've seen resistance, 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 resistance. But right now, as far as I can see, it's above it. So what should happen here is it should come down here and it should bounce. It should give a nice bullish signal right here. Dapper Dan says the support and resistance webinars are in the recorded section. Yes. Any other questions before we close it down? Oh, we should have a winner tonight. Let's have a winner. Let's pick a winner right now. I hear a dog. Do you have one? No, that's the neighbor. I'm actually guinea pig sitting right now. I have 2 guinea pigs. Oh gosh. I don't know why people have guinea pigs. All right, so anyone, okay, we're going to pick a number. The winner here is going to get the Acapulco course. Okay, it's an online course, and the winner gets it. All right, I'm thinking of a number. Everyone, if you want to enter this, you have to type a number in the next 20 seconds. Okay, type your number in. Between 1 and 100. Closest person wins. Okay. 93.85. All right, everyone's done it. Okay, has everyone got it in? You have 10 more seconds. We're gonna do it random. We're gonna do it randomly because that's fair, right? It's fair to do it randomly. Okay, everyone's in. Hey, Edward, you can't put in 2. You can only put 1. You can only put 1. Okay, we're gonna finish now. All right, we're gonna finish now. Also, if I don't know if you guys know, there's a DVD set at FX Street, the Naked Trading DVD. It's a 2 DVD set, and if you purchase that DVD set this week, I'll also give you this online course as well. Okay? So anyone who wants that DVD set will also get this course. You just have to email me, and I'll send you the access to this course. All right, so here we go. Random number. So everyone's in. Yeah, there's the link right there. Maud put the link in. Okay, we have one number between 1 and 100, and here we go. Whoever gets closest to this number gets the Acapulco course. It's a 12-video course. Ready? Who's it going to be? 50. Oh, I think someone did. Edward. Edward said 50. You got it right on the nose. All right, Edward, just make sure you email me. Make sure you email me, and I'll give you the Acapulco. Okay. The last person who won it really loved it, so I hope you love it. It's Walter@fxjake.com. And anyone who wants the First Touch book or the Belt book, you can email me as well. All right. It's right here, Edward. You can see it right here. It's walter@fxjake.com. Okay? Schwag says that Edward put it on there 3 times. Edward, did you cheat? Edward had 3 entries. All right, guys. I hope you have a wonderful night. Sorry, Edward. Sorry. Next time we'll have a strict. Next contest we have, next webinar, we'll have strict rules. Whoever enters can only enter once. Okay, that's fair. Thanks a lot, Maud. And anyone who buys the DVD set will also get the course as well. Okay. I hope you guys have a wonderful trading week, and we'll watch out for those belts next week too. Take care, guys. See you, Martin. Bye, Hans. See you, Carlos. See you later, guys. Thanks a lot, Maud. Bye, Mish.